Thanks for stopping by, everyone. My name is Jeff, and the Lyft IPO is set to launch tomorrow on the NASDAQ exchange. And of course, the ticker symbol is going to be LYFT. Now, this is highly anticipated, and I think the real surprise here is that Lyft ends up IPOing before Uber, okay? I don't think anybody has really seen that coming. And so I guess from that, you could kind of assume that Lyft is a little bit better run company than Uber. Does seem like Uber has a lot of problems. Of course, they were talking about an IPO 2 and 3 years ago and have never seemed to make it happen. And now Lyft, they are ready to go tomorrow, okay? Early estimates of the Lyft IPO pricing was around $66 to $68 a share, and now they are pricing the Lyft IPO at $72 a share, so it's been bumped up a little bit. So I guess what I want to talk about in this video, guys, is Lyft a buy on IPO day, and kind of what to expect. I do think you will see a pop in the stock price. I think there is probably an opportunity to make a trade, but just keep in mind, we don't know anything about this company fundamentally, and I'm going to point a few things out for why you might want to wait off on the investment side of things. Guys, if this is your first time tuning into the channel, make sure to subscribe and hit the bell for all notifications, and please drop a like on this video. I appreciate all the support. Alright, so sometimes, guys, the answer is right in front of you and you might not realize it. So this sentence right here says, this would value the company at more than $20 billion and hit the top of its expected range, okay? So right there tells me that the Lyft IPO is coming in with a lot of hype and it's already trading at the top of its expected range before it's ever even been traded on the stock market. Now, typically, an IPO is not going to be available at market open. You can usually expect to see it start trading maybe 2 to 3 hours into the trading day. And historically, the more hype an IPO gets, guys, and where they're having all these road shows and analysts are covering it constantly and everybody in the world is buzzing about an IPO, that is almost a surefire guarantee that the stock price is going to tank maybe a couple days or a few weeks after the IPO. Once in a while, there is an IPO that takes off from day one and does tend to run, and you may never get that stock price again. But I'm going to go with my gut here, guys. I think Lyft will trade under $72 a share at some point. Like I said, it's really all comes down to that first set of earnings. And so they do have some pretty good revenue and bookings numbers coming into this IPO. And of course, guys, these numbers can be manipulated. You know, I've seen in the past, especially going back to the Snapchat IPO, where these massive revenue numbers were getting reported, and then you get to the first earnings report, and investors are very, very disappointed. You know, and Snapchat has been trading well under its IPO price, you know, for the entirety of the time it's been on the stock market. So we will consider these numbers. Guys, just my point I'm making to you, don't believe that these numbers are accurate, okay? Because they were not reported to the SEC, and we're just trusting that what they're telling us is accurate. But they have a net loss of $911 million. That's wider by 32% from 2017. So obviously, the bigger your company gets, the more money you make, the more loss you are going to take. They have revenue of $2.2 billion, which was double the revenue it saw in 2017. That makes a compelling argument that this company is growing very, very fast, and you probably do want to get involved with it on the investment side sometime pretty soon. And then of course their bookings of $8.1 billion, that's an increase of 76% from 2017. Lyft has been named to the CNBC Disruptor 50 list 3 times, ranking 5th on the 2018 list, which, guys, again, in my opinion, doesn't really amount to anything until it's trading on an exchange and we can see their numbers. But they do have an outstanding list of underwriters: JP Morgan Chase, Credit Suisse, and Jefferies. And of course, JP Morgan Chase, they underwrite all the big IPOs, and just keep in mind, these guys get prices that we cannot get, okay? The underwriters are probably coming in at maybe $30 or $40 a share, where the first publicly traded stocks, like I said, is going to cost at least $72. So it was almost exactly 1 year ago when Spotify IPO'd, and guys, Spotify came onto the exchange around $149 a share, and as you can see, there was opportunity for a trade here. But still, even from an investment standpoint, of course, the market tanked and Spotify got much cheaper. And that's why I always feel like there's no real need of urgency to buy on IPO day. Sometimes it is fun just to get a few shares in your portfolio. That way you have exposure to it. Now, I will say this. I bought NEO stock on IPO day, and I actually traded the stock 2 different times and made a couple of quick gains on it. Most of us do remember the NEO IPO when it was getting massively hyped as the Tesla of China, and it came on the market around $6.60 a share and almost immediately run to $11, almost $12 a share, netting a 100% return in one trading day. There is probably an opportunity to make a trade here tomorrow, but the odds of getting a good investment price are very, very low. Now let's visit an IPO that didn't get hyped very much, but has had outstanding success pretty much the whole time it's been on the stock market. And that is ticker symbol YETI, okay? So YETI IPO'd back in October. Guys, this one did not get the huge amount of hype that some of the others like NEO and Spotify and Snapchat did. And of course, even on IPO day, didn't see a lot of action and actually traded down in December with the rest of the markets. But since October has netted almost a 90% gain, and pretty much all the coverage on YETI is very bullish. So sometimes I think that does play a factor. Some of these companies that IPO and don't get all the hype, sometimes they don't tend to get overbought and then heavily shorted. They just kind of grow at more of a natural rate, and YETI has seen a lot of success. As a matter of fact, I actually recently took a position in YETI around $21 a share in my M1 Finance portfolio, guys, and that position is performing quite well. And then, of course, on Friday, Levi Strauss IPO'd. Guys, the ticker symbol on that is LEVI. And again, kind of the same story. The stock did run up to $23 a share, but since that time has actually dipped down quite a bit, and the volume has come down. And honestly, guys, I think this one is going to get shorted quite a bit, and we will probably see it under $20 a share very, very soon. Not to say it's a bad company. It has a very small market cap. It's actually under $1 billion. Now, lastly, guys, I'm going to share a stock with you that has a huge reputation, and you would never guess that in 5 years' time, this stock is still under its IPO price. And that is ticker symbol TWTR, guys. I'm talking about Twitter, okay? Twitter IPO'd in the markets back in November of 2013, and within 1 month's time, guys, traded up well over $70 a share. And it was being heralded as one of the most successful IPOs in history, and has never even got close to that stock price since. As a matter of fact, Twitter has traded all the way down into the teens and has gotten close to $10 a share a couple of times. And as of just recently, has started to recover, put some decent earnings together, and the stock is seeing some growth. But my point is, sometimes buying a stock on IPO day could end up being one of the worst decisions you make. And let's face it, if you're holding this stock at a loss for 6 years, at some point you would probably just end up selling it for a loss and moving on to something else, okay? So maybe my suggestion for playing the Lyft IPO tomorrow, guys, would simply be to set a limit order. You're telling your brokerage this is the absolute minimum I'm willing to pay for a share of Lyft, and if your order gets filled, I would look to trade it by the end of the day and try to capitalize on that big pop in the stock price if that is to happen. And I'm kind of anticipating that to happen. Otherwise, guys, I would just kick back, give it a few days, let the stock cool off a little bit. I'm pretty confident that we will see this stock under $72 a share. But anyways, guys, that's all I got for the video. Drop a comment. Tell me if you're interested in the Lyft IPO or if you have plans to buy tomorrow on IPO day. I think I am probably just going to sit this one out. Thanks as always for watching the video, and have an awesome day.